Well, welcome again to the Global AgriFood TechPreneur Programme on funding and finance. This is part of the 6-week interactive course on entrepreneurship, tech, and sustainability in the food system. Once again, we need to touch on why we're doing this. We have a broken food system where 1 in 5 death is linked to malnutrition, and over 900 million people are hungry globally. 1.9 billion people are currently recorded as obese, and the number continues to increase every day, which is also accelerating the rate at which we have non-communicable diseases across the world. Also, over 1.3 billion tons of food are currently wasted, while 53% of Earth's soil is being degraded, meaning that we are faced with challenge of being able to produce good food that can improve the health of people. If we have degraded soil, it simply means that we're losing the micronutrients that are essential for human health, and we need to look at how we can address these challenges so that we ensure that more people have access to good food. So these are the key drivers for us, having these discussions, engaging with young graduates who are keen to lead the transformation of the food system within their countries. They've identified key problems and are very keen to look at how they can solve the problems. Now, finance. What is finance? Finance is the management, creation, and study of money and investment. Finance is all about the resources that you need to be able to deliver on projects. Finances drive your activities in your business, in your organization, because everything has a particular financial undertone, either in terms of the revenue you generate or the cost which you have to pay to be able to create your products and then generate the revenue. So understanding your finance is fundamental to running a successful business, and part of the key pillars of sustainability which we've looked at in the past is profitability or prosperity, which revolves around economic sustainability. How do we ensure that the business, your agri-food business which you're working on, is economically sustainable? It drives profitability, drives prosperity in a way that has a positive impact for your business and for the society where your business exists. That is a very important point to know, and also keep an eye on all the time, because you don't want to have a financial forecast where you're not able to measure and monitor your finances. You want to be able to hold yourself accountable to the financial situation of your company at every point in time, to be able to work in such a way that your finances could help you address the challenges you have in your business. It's not easy for most companies who are starting up. It's a bit of a challenge, but I think it's something that over time, as a business grows, you have a better understanding, you have more resources to manage challenges, and then keeping abreast of your finance becomes a lot easier and less onerous for you as a business leader. So for us to be able to get our heads around these, there are key terminologies we need to come to terms with. It's really important for those of us who have not taken the time to look at the Rare Bank of Scotland Business Builder platform, that you do take time to look at it, because the Rare Bank of Scotland, they have kindly partnered with us on this Global AgriFood TechPreneur Programme, providing us the resources to their Business Builder platform to be able to engage meaningfully with you. And as a bank, as a well-renowned bank, there is no better resource that we can look for than what they've provided, especially for this topic on funding and finance. Now, when we talk about cash flow, is overall movement of funds through your business each month, including income and expenses. So it's in and out, what flows in and out of your business. Your revenue is the money that comes to the business. So from your sales, your expenses, of course, are the costs that you incur as part of doing business. So some of them could be variable costs, some of them can be fixed costs. So the variable costs covers day-to-day overhead that you have in your business, and then you also have the fixed costs too, which are fixed in terms of it doesn't vary that much depending on what your business is doing. The cost of goods sold are costs associated with getting the product or service to market. So what exactly does it cost you to get the product to market? It covers raw materials, manufacturing expenses, and labor cost. This cost can also be referred as cost of sales or direct cost. We'll have the gross profit, which is the sum of total revenue minus the cost of goods sold, showing you the profit before business expenses are deducted. So it's really important to differentiate it when you talk about your expenses in your course. It's very important to differentiate what that means for your business, because that really affects your financial reporting. The cost of goods is actually cost of producing what you have, while your expense or cost is the cost of you incur each month in order to operate, including grants, rents, utilities, legal costs, employee salaries. So mostly your expense or costs are fixed costs, so that they're mostly fixed because you know what it is in terms of what it costs you on a monthly basis. And also the cost of goods has to do with your how you get that product to market, which could vary depending on what volume you're producing or how you decide to produce that particular produce at a particular point in time. So it's important for you to understand that and understand where each of the costs goes into in your financial reporting or in your bookkeeping, which will go into more details as we progress. So you have the net profit is the profit that remains after business expenses are deducted from the gross profit, often referred to as the bottom line. So you first of all deduct your cost of goods to determine your gross profit, and then you deduct your business expenses to get your net profit. So the assets are any items or values within the business, including your product inventory, your IT equipment, through to any IP the company owns. So this asset shows what your the value of your organizations, the worth of your organization or your business. Your asset could also be in form of goodwill, which you need to also factor in where you have that goodwill. When we talk about the last case study that we did for mindset, we were talking about goodwill in terms of the quality of their produce or the consistency in quality. That is a goodwill. That's what they're known for. The branding they have, those are goodwill. So those are your assets as a business. Though they're not tangible assets, but they are things that you've achieved through doing business. So we talk about liabilities. This includes any debt accrued by a business since it started trading. So this could be bank loans, credit cards, and money owed to vendors or suppliers. Capital is the money the business has in his account. This can be called cash. They are assets and investments that you have in the business. So depreciation, often we do encounter depreciation in financial accounting because most fixed assets, which include equipment that you purchase and products you purchase at times have got the rate of depreciation, which is the rate at which they lose value and they're no longer useful at the end of life. So you need to factor in this depreciation in financial accounting. One of the key things about sustainable practices is that if you are able to engage or you buy from manufacturers who engage in sustainable practices, it means that the product you have or you use has got good value at the end of life because they can be reused again into new products, so which gives you a better value in terms of depreciation on your financial reporting. So when we talk about finance, we can have you can look at finance at a glance, and trying to work out how the money or finance flows through the business. And there's been a lot of research into this from different research institutions and think tanks. So and they've come up with a business model canvas, which in a nutshell tells you the key things you need to consider in your business, in your agri-food business, in this case. So you have to look at your key partners, which some of those points cover the majority of what we've discussed in the past sessions. So looking at your key partners, looking at your key activities, key resources, value proposition, which we have dealt with extensively, customer relationships, channels to which you engage with your customers, customer segments. We did talk about this, looking at what segments do you have and what is your total addressable market and your beachhead market. So this helps you to know where you need to start from. Luckily, with the World Food Tracker platform, we have actually addressed some of those challenges for anyone engaging in the agri-food sector, because we've taken the pain out for you in terms of customer engagement. So what you need to focus more is on the value proposition to your customers, and also the key partners you need to work with, whether in terms of supplying you materials that you need to use for your production, and also the key activities you need to work on. So really de-risking that process, the process of this financial review, is something that we've been able to do through the World Food Tracker platform and through these sections we're running with you on the Global AgriFood TechPreneur Programme. Open up opportunities for partnerships, open up opportunities for you to identify who you need to work with and who you can work with via the World Food Tracker platform. But ultimately, once the bit about feasibility and desirability, we've kind of covered that through the World Food Tracker platform, but you still need to work out the cost structure for you. So, all these things are available for you to use on the World Food Tracker. But at the end of the day, you still need to, dig down on the costs and also on, the revenue streams, how you need to work on the revenue that you need to generate via engaging with users on the World Food Tracker platform or any other sales pipeline that you choose to use, and work out how that builds on in terms of your profitability and viability as a business, economic viability as a business, because that's really important when you're talking about finances, that you're economically viable. So all I can say is that great thing, we've kind of worked on feasibility, we worked on desirability. This is what the World Food Tracker platform helps you to address. The only bits you need to work on in those areas is the value proposition, just making sure that you can demonstrate that better to anyone that you're engaging with. And then once you do that, you then move on to the cost structure and the revenue streams, knowing that the other aspects have been effectively addressed. Now, cash flow is an important area. So once you have looked into this overall business canvas, business model canvas, you will begin to see how the pattern of what your cost and revenue is. And it's very important with the business model canvas that you're able to do that at the start of your business. And once you move on into the business and you start running things, it's very important to keep an eye on your cash flow statement, which is also something we provide via the World Food Tracker platform, that you could track what you are, what you're producing and what you're selling, and then track what your revenue looks like over time. So it's purely cash inflow and cash outflow on a monthly basis, so you can see what your cash sales are and what revenues you're generating from it looks like. But this is just a very simple cash flow statement to give you an idea of what that looks like. You can see under the cashing, you have the cash sales. So these are the ones that people paid cash to buy the produce. The credit sales, these are the ones that people owe you. So in the first month there wasn't any credit sales, and the second month had a bit of credit sales. This will really help you to know when you have available cash. So one thing is knowing the sales you've made. The other thing is knowing what is available your liquidity in terms of fund. So in case if you want to use the fund for something, that you know that this is what is available for you to use. So it's important to keep an eye on your cash, on your cash or liquidity status as a business, to know what you have in place or not. So in terms of the cash out, here you have just the purchases, the loan payment. So if you have secured a loan, you need to pay interest on the loan. So you have that interest going as a cash out. You may have to purchase a car for the business, and you have to pay people for the business. So these are the kind of expenses that you've covered, which are cash out. So both expense here, you have both expenses and also cost of goods in place. So you need to take care of that. And then at the end of the day, you have your cash at end at the end of the month, which shows you your liquidity and what you can use at that point. So very important. Your cash flow is key to you running your business, and keeping an eye on your cash flow is very important. It tells you what you can do and what you cannot do, and at what point you need to seek for additional funding to be able to deliver on your expense or running the cost of goods for your business in the month. Now, your profit and loss statement shows you it shows you in arrears what is the position of the business. So usually it's presented on annual basis to show you your profit and loss statement. So here you have an example of what a profit and loss statement looks like. It's purely showing the sales that you've got, the cost of goods, and your expenses, and what your net profit is. We did talk about the fact that your gross profit is the sales revenue less the cost of goods, so which is the cost of manufacturing the produce. So whatever cost you incur in growing your plants and stuff, the materials you have to buy, the cost of land you have to acquire, whether it's on lease basis or on hire purchase, wherever it is, that covers the sales revenue. That covers on the total cost of goods sold, and then you have to actually find a way to make this in terms of pay per produce. So whether it's in kilogram or tons, you have to make it so you can hold yourself accountable. And then you look at the expenses you made in terms of salaries and also other administrative costs, and that will give you a net profit. Very important for you to look in retrospect of what you are doing to have a better idea of your profit and loss statement. Then your balance sheet shows you a snapshot of the financial position of a company. It's very important when you are trying to look at certain financial ratios, which that means the financial state of the company. So the balance sheet will look into the total assets, the total liabilities, and the shareholder equity of the company. Most importantly, also, it's very important that when you are seeking to work with other establishments, that you are able to pick up their financial statements and be able to work out the financial position of the company to determine or decide whether you want to do business with them or not. It's really important to know that the key financial document that you can review is a cash flow, the profit and loss statement, and then the balance sheet, which we have covered now. To help you to really get your heads around this, it's important to hire an accountant to work with you as you run your agri-food business. The value you get from hiring a suitable and qualified accountant outweighs the cost that you pay to the accountant. Very important to know this and put it somewhere, that the cost you pay to have the right accountant or the right legal expert working with you in your business outweighs the cost you pay them to work with you, especially if they know what they're doing. They're going to save you a lot of money, especially with regards to the support most government do have for businesses. They'll help you to point you in the right direction of assessing those support in making sure that you have your accounts returned as needed, that you're not penalized for not having the right account in place, and that you understand your financial status at every point in time. So please, I will do encourage every one of us, if you do not work with an accountant or a legal firm, do find one. You may not be in a position to hire a global firm at the moment, but I'm sure there are some local accountants and legal firms who will be able to support you at a reasonable cost. You can arrange with them that, as a business finances grow, then the percentage remuneration for them will grow. And so many of these legal professionals will be happy to work with you on that terms, because they want to be part of your journey and they want to grow with you. So I would encourage you to please do find a legal firm and an accounting firm to engage with. It's also important for you to make sure that you have a company registered for your agri-food business, because that's what will help you to start keeping your holding yourself responsible, accountable, and taking ownership of your business. If you don't do that, you will struggle with managing your finances. You will also struggle with raising the required funding to run your business professionally. So I thought it's very important, because those terms are very complex. You need to really take time to understand them as relevant for your business, and also to be able to make the best decision from understanding what each of the numbers mean for your business and for your activities within your business. So take it that as someone leading an agri-food business, you need to have your company registered. You need to engage the right legal and accounting professional to work with you. They will support you to be able to make sure that you understand these terms better, and you are maximizing the available support you need within your local environment in terms of government support for businesses, and also that you are you're able to meet your legal and official requirement in terms of rendering your accounts the government, and making sure that you're engaging with your annual returns as needed by the government, but also that you understand the finances for your business and what that means and how you can improve on them. So for you to be able to understand your finances, you need to keep record of your day-to-day activities within the firm, within your business, by ensuring that you check that you're making more money than you're spending. You have reliable financial information for planning and budgeting decisions. And from the bookkeeping, you can see if a cash gap is coming and take steps to avoid it. And you're more likely to find incorrect payments or even fraud that might cost you money. So by keeping your records, you be able to get these different insights, and you can complete accurate tax returns, and you have your financial information organized to make it easier for you to work with other parties such as lenders, investors, and accountants. I think this is kind of a summary of what I've covered. Now, so funding is the act of securing finance to deliver a project or proposal. We will always look for funding in our businesses, and funding varies at different stages of your business. So the amount of funding you need today will vary to the size of funding you will need in the next year. What that simply means is that most funders will want you to establish or be able to show the progress you're making before they can give you more funding. So no funder will give you large amount of money from day one without you being able to show them the progress you're making, and also show them how you plan to use the fund to deliver in the next phase of what you're trying to do. So it's really important that you look at what, and this comes down to what we talked about in terms of strategic planning. What can you achieve now, and what can you achieve in 5 years time? What funding do you need now, and what funding do you need in 5 years time? And this will help you to also define who you need to talk to and where you need to raise the money. So Startup loan can be quite useful. So you can have grants and startup loan to kind of kick off what you're trying to do. There are other options here, so rate of funding, equity investment, crowdfunding, and borrowing. A lot of advances have been made in terms of sustainable finances, which can really help most businesses accelerate what they're doing. And we are looking to support most of the Global AgriFood TechPreneur participants to work with us as we explore potential sustainable finances to help you grow what you're trying to do. And also through the World Food Tracker platform, we can ensure or demonstrate that the sustainable finances are being effectively utilized for the purpose which it's been designed for. So there are different opportunities, but I think sustainable finances are key to enabling us to evolve a sustainable food system. So for you to be able to source funding, you need to cover some key things. There's some key document you need to have in place. We did talk about the business model canvas, which you have just run through quickly. And I did mention that most of the aspects in terms of feasibility and desirability has been covered in the value that we offer via the World Food Tracker platform. So you can actually demonstrate that, you're partnering with an organization like IntelliDigest through the World Food Tracker platform. You can show that you understand your market segment because you have already people on the platform who are sustainability focused, and you can also understand the demand in terms of what they're looking to consume via the World Food Tracker platform. So a bit of that business model canvas has actually been covered, covering feasibility and desirability. The key thing is to work on is a value proposition and your viability. So looking at your cost and also looking at your revenue streams and how you want to work that out for your business. So very important to know where you have strength already by participating in this program and where you need to work more on going forward to make sure that you are able to meet the funding documentation requirement. So we'll talk about pitch. So you need to, this is what we'll be covering through this engagement, being able to quickly summarize and provide a value proposition for your business. So the pitch should cover this point, should cover the team who is working on the project, why you're doing the project, and what your financial forecast, which is the cost and the revenue stream entails. They need to have a one-page summary, which we'll talk about shortly. Your pitch, lists your pitch deck and your business plan. So you need to have a business plan with an executive summary of what your business is doing. Your financial projections, this covers the cost and revenue streams, which I think I did mention via the business model canvas. That those are the areas you need to focus more on, because that's where you need to demonstrate that you understand the numbers and you understand what you are projecting to achieve with the fund you're looking to secure. And then you understand the value of your business and how your business grows over time. You understand the funder who is trying to provide you funding for. Here we're looking more into sustainable finances, and you're able to do your due diligence about the funding and also the wider market you're looking at. So so this is kind of funding one-page summary, which you can review in more details as the slides are being shared with you. We're hoping that everyone should have this developed before the next session that we will have. So this is a funding checklist just for you to quickly go through to make sure that you already have everything you need to be able to go ahead and speak to potential funders to be able to fund your business. So the next case study will be on Protec valuing forestry assets. This will help you to apply some of the learning that we've gone through in this particular topic to this case study. And then key questions for reflection, we cover, this points that we've listed here, and we'll discuss that in the next session. Overall, if we fail to plan, we plan to fail. When we plan, we save food, health, environment, and wealth. These are the points we'll keep reminding ourselves in every session. We need to expedite action to 2030 to ensure that we have more food available to people. Thank you very much for your time, and